Decoding the Bitcoin halving. Winners and losers. It's safe to say that the most anticipated event of the year for the crypto community right now is the Bitcoin halving. It's almost the stuff of legend and fantasy novels. Once every 4 years, the magic internet money is slashed by half, and only the bravest and most efficient miners can mine enough internet money to defeat the great evil, centralization. Welcome to the channel, guys. It gets me excited to talk about the one thing that pumps adrenaline through my veins, and that is crypto. The world of magic internet money is always buzzing, up and down, for the eternal fight between the ancient bull and the life-sucking bear never ends. In today's video, we will be giving you the most wholesome breakdown of the Bitcoin halving you will find on the internet today. Don't forget to like the video, subscribe to the channel, and turn on the notification bell. The day the world ends. Most experts agree that if Bitcoin were to ever hit $1 million in value, then the world as we know it must end. To have $1 million Bitcoin in your wallet, the father of cryptocurrencies must be adopted by institutions and governments. By that, I mean the Federal Reserve, the White House, and China. Highly unlikely, you might say, but it doesn't change the fact that such a gloomy future is a possibility. Building on that, here's a question. When would the last Bitcoin be mined? The truth is that Bitcoin's insane growth in the last 2 decades is simply a miracle of the very basic law of demand and supply. The more Bitcoin there is, the lesser the demand. The fewer Bitcoin there is, the greater the demand. In that respect, it means as long as Bitcoin is still being mined, there would still be supply, which would, in theory, keep its value from ballooning to millions. Thus, once the last Bitcoin is mined, the world ends. Hypothetically. You get my drift? So, once again, when would the last Bitcoin be mined? It took 4 years to mine 50% of Bitcoin, but it will take another 120 years to mine the remaining 50%. How is this possible? Bitcoin halving. Satoshi's ingenious plan. The core architecture of Bitcoin is that it is a deflationary asset. Basically, it was built to have a steady increase in its purchasing power over time. If you bought 2 pizzas with 7 Bitcoin in 2011, you should be able to buy 10 pizzas with the same amount in 2013. This is the exact opposite of the inflationary model that fiat money uses. But how is this possible? If you've never appreciated the brilliance of Satoshi Nakamoto, you should start now. Satoshi's solution to the problem was simple. They added an algorithm to Bitcoin that slashed by half the rewards gotten by miners for adding new Bitcoin blocks to the blockchain, and the algorithm implements itself every 4 years, or after 210,000 Bitcoin blocks are mined. So, in 2009, Bitcoin miners earned 50 Bitcoin for each block they verified and added to the network. In 2012, it was slashed by half, and miners got 25 Bitcoin as a reward. 4 years later, in 2016, the reward fell to 12.5, and during the third halving in 2020, it was reduced again to 6.25. The next halving is estimated to happen on Saturday, April 13th, 2024 by roughly 7 p.m. UTC. The halving would reduce miners' reward to 3.125 Bitcoin per block. Why does the halving keep inflation away? That is where Satoshi's ingenuity becomes irresistible. As I said earlier, the miracle of Bitcoin is just demand and supply. The miners' rewards dictate the inflow of Bitcoin in circulation, so when it's cut in half, the inflow of new Bitcoin reduces. The subsequent drop in circulating Bitcoin triggers the demand and supply cycle. While supply shrinks, demand increases or decreases, and prices change accordingly. Whether demand increases or decreases, one thing remains constant: no inflation. In 2011, Bitcoin's inflation rate was 50%. After the second halving in 2012, it fell to 12%, and it became 5% in 2016. Currently, inflation is 1.76%, which is hard to doubt given that Bitcoin's price is at its highest in the last 3 halvings. If you've been following, you would have noted something at this point. Bitcoin keeps rising with each halving. Yes, historically, the value of Bitcoin goes up every halving. Historically, every 4 years, the amount in your wallet could possibly quadruple. It is magic internet money, remember? When division becomes multiplication. Remember the eternal battle between the ancient bull and the life-sucking bear I told you about? Yeah, it never ends, and most times, no one can tell who will get the upper hand in their duel. However, there is one time that the bull is most likely to give the bear a major uppercut, and that is after a halving. Each halving is followed by a bull run that sets Bitcoin on the path to double its price at the time of the halving. Its bullish run is a result of the demand and supply cycle. A Bitcoin halving creates a hole in the market dynamism as supply decreases and the Bitcoins in circulations do not hold as much weight as it did before the halving. Additionally, the market compensates for this by driving demand up and price surges. In essence, to multiply the amount of value you have in your wallet, the Bitcoin network divides it. Perhaps I'm wrong, but it is almost biblical. Matthew 10:29 says, "If you cling to your life, you will lose it. But if you give up your life for me, you will find it." Maybe it's a little out of context, but you get the drift. There have been 3 halvings so far, so it's safe to say a similar phenomenon can be expected this time. During the most recent one, May 2020, Bitcoin price was nearly $8,500. At the time of making this video, Bitcoin trades for $39,426, which is almost a 400% increase in price. Don't forget that during these 4 years, Bitcoin hit its all-time high of $68,789. We could imagine how high it could go after the next halving. Some even believe it could hit $1 million. However, the price surge does not occur immediately after the halving. Evaluation of past halvings shows that the price spike happens after 3 to 6 months. In 2020, it took 6 months before the bull run hit, and the market could follow a similar pattern this year too. Nevertheless, a price surge would mean that there would be winners, as hodlers recap the reward of their patience. But what if the price falls instead of rising? Where there are winners, there will also be losers. Bitcoin halving: winners and losers. Once rewards are halved in April, the Bitcoin mining hash rate, which is currently 556.39 exhashes per second, will likely decline dramatically. To understand hash rate, imagine Bitcoin blocks are tricky puzzles, and each time a computer solves one, it gets a reward. The total number of puzzles that all these computers solve in a specific time is called the hash rate. It's like saying how fast and powerful all these computers are combined. The more powerful the computers are, the higher the hash rate. A decline in hash rate means that it is more difficult to mine Bitcoin, implying that supply drops and is followed by a complementing increase in demand. As you found out earlier in the video, a rise in demand is also a spike in Bitcoin price, and for hodlers and miners, that is a massive win. However, although halving is an important factor that influences Bitcoin price, it is not the only factor. Institutional and individual adoption, developments and innovations, real-time news, etc. impact Bitcoin price significantly. So, market volatility is also going to come into play, and no one can truly be certain that a price surge would happen after a halving. Hence, if we witness a bear run after the halving, there would be losers, and the crypto mining industry would be taking the biggest hit. Currently, the mining cost of publicly listed miners is between $10,000 and $15,000. Halving would double the cost, raising the break-even point to $20,000 to $50,000. According to JP Morgan, mining costs could rise as high as $40,000. The consequence of the high cost of mining and price decline is that only the most cost-efficient miners survive, while others are forced to shut down operations. Efficiency would be key to surviving post-halving, and the crypto mining industry has placed focus on the efficiency of machines, rather than simply raising hash rate as much as possible as it did in the previous halving. The mining industry has a high cost of capital when compared to other industries, even doubling that of the precious metals sector. A large drop-off after halving would impact it significantly and hinder its growth. Put succinctly, losing takes just as much as winning gives. This is where we draw the curtains on another insightful video. I hope you enjoyed it. Did you hold Bitcoin during the previous halving? How was your experience? Let us know in the comments section. Don't forget to like, subscribe, and turn on notifications. Thanks again for watching. I will see you in the next video.